In this video, traders, we are going to compare trading the long side versus trading on the short side. Stick around for this one. Hey guys, how's it going? I hope your trading is going well. So long side versus short side, let's have a look at the difference. So very often we kind of look at things and look at them, hey, well, it's just a mirror of the long is a mirror of the short. And okay, sometimes we get that, but not all the time. If you look at a chart and you look at, let's say, an uptrend versus a downtrend, there's very different characteristics. Now, obviously, if we're in a range, then generally speaking, the move up and the move down are relatively similar. We're talking about, for a choppy environment, or not necessarily choppy, but a kind of range bound environment, pushing up, we're pushing down, then the moves might be the same order of magnitude, might be the same volume, very similarly, just flipping on its head. And if you flip the chart upside down, very similar. However, if we're talking about an uptrend versus a downtrend, there's distinct differences which mean that we have to trade things slightly differently. We have to look at things in a different manner. So you may know this yourself from your own trading. You may have traded long side, short side. You may have seen long up days, down days, up months, down months, etc., and seen the main difference. So some of the highlight things here is that on the long side, if we're talking about those trend day moves or kind of trending environments, the long is much slower. You get this chug, it kind of moves up a little bit, moves down a little bit, moves up a little bit. And not always, of course, guys, we're generalizing as we always are in trading. There's not always a hard and fast rule for trading. There's always exceptions to the rule. But we get those chugging trend days that kind of take out highs, maybe they rock back a bit, much slower. There's no urgency there compared to perhaps on the short side, the short downtrend days or the downtrend weeks, it's much more kind of a quick move and then a sharp pullback and then a kind of stall for a little bit and then another quick move. So it's much more, drastic changes in momentum as opposed to the long side, which generally slows down and just chugs and goes slower. And we get less urgency on the long side. People, unless they're covering a short, and we're talking about a stock with a very high short interest. If you're talking about a general index or a currency pair, unless someone's stuck, it's generally kind of grinding along. And this is worth pointing out to you guys, there's a little bit of a change in obviously a currency pair because you're trading one against the other. So there's not necessarily a long or short side as such, even though you're going long one and short the other, because you're trading a difference between the two. But obviously, if you're trading, let's say US dollar, a lot of people might be long US dollar. So if you're trading the appropriate pair, that means you're short US dollar, then maybe you get this kind of scenario. But more likely for assets that people are generally long on, like index futures or like some of the bigger stocks. So bigger moves and short, you get obviously much more capitulation and flushes. Not saying don't get on the long side, but it tends to be more on the kind of rotational markets that are pushing through highs and flushing through highs, but just chunking ones that just don't really get that final push because there's no need to. The whole point of a capitulation or a flush is to panic, get me out, get me out, get me out. And that's what happens on the short side. A lot of people just selling, don't care about price, just want to get out now, causes that draft lower. There's not much liquidity to soak it up. Lower volume versus good volume variance. What I mean by that, so lower volume generally on these chugging trend days against the short side where we'd see good volume and then nothing, and then good volume again, which helps you read the market. The good volume flushes and the variance, and the volume starts to go quiet as it just sits there and stagnates at lows. It's telling you, it's shouting at you, there's no buyers. There's no buyers here. So every little kind of pop up, you can short thinking, well, actually, if there's further volume coming in, it's going to be sell volume. It's not going to be buy volume. And so it just helps you read with the market. And listen, there's no right or wrong way to trade stuff, of course, but it's just some observations. And then we've got kind of one-way trade. Alongside generally will just chug and chug and chug and chug and chug. Short side, let's say we're going from here to here, from Y to X. So if we're going again from X to Y on the short side, then very often we kind of do this. We push up and then we drive lower and push up and drive lower, rather than the chugging 45-degree trend that's just grinding higher. And pullbacks are very few, so it's hard to get on them as such. Short side, you've got two-way trade. There's opportunities to buy flushes for a decent counter trend pullback as long as you're quick and nimble. There's opportunity on both sides of the coin very often when you're trading or marketing the short side pressured environment, much more two-way trades. There's more opportunities. So that's why often traders prefer this type of environment because it generally creates more opportunity than this. Now, of course, if you're on this trade and you're in and you're sitting there and you're already in profit, there's no stress with this. It's just chugging, chugging, chugging. But from an active trader who kind of wants to get in and tweak and play around with it and kind of grab little bits out of the market, then this is less conducive to that, because it's normally at highs, it's normally quite quiet, harder to read. So those guys are some of the long side versus short side stuff. Don't forget to check out our channel sponsor in the description below, and of course comments on this, guys. What do you think about trading long versus short? Some of the things, some of the differences in your experience with the type of market that you trade. Stick in the comment section below. Take care, keep your risk managed, whichever side you're trading on. Bye bye.